You've been warned. I'm your host, Steve Van Metre, and thanks for joining me today. In our lead story today, I just received a terrifying email from one of the industry's top analysts, and in his recent report, he showed that investors are taking an excessive amount of risk in this market. I'm going to show you what he's pointing out and why. When you see it, you'll be just as terrified as I am. Plus, investors piled into this trade ahead of the election. I'm going to show you why on Monday you need to sell this before it comes crashing down. And speaking of selling right now, investors are unloading bonds at the fastest clip in years. I'm going to show you why Wall Street's next big trade could be in the long bond. And speaking of big trades, we're going to show you some trades we just put out for our subscribers this last week and some that I'm going to put on Monday. That's right, me personally, and you can trade ahead of me. You want to find out how? Check out our CTA Timer Pro. And while you're there picking up the link for the 30-day free trial, check out our subscriber for today's show, Diana Shipping. You can find them on the New York Stock Exchange under symbol DSX, and they specialize in ownership and bareboat charter and dry bulk vessels. And simply, Wall Street recently noted that they believe their stock is 60% below value, putting up what could be a massive trade opportunity. Stay tuned to the end of the show or check out the pinned comment or description for more information. Now, let's head over to Bank of America Global, where we picked today's story up with a flow show from none other than one of the leading investment strategists in this country, Michael Hartnett, who talks about the big picture, suggesting that the investment clock is now turning equity bullish as we move into the recovery phase, as lower rates and higher earnings per share for 2024 could be followed by a commodity bullish boom phase of higher earnings per share and higher rates, and what he's describing as a bear steepening of the yield curve heading into next year. And this is what you call the Trump trade. Of course, one of the biggest risks for the market is how it's going to continue to drive increased earnings, particularly at a time when we're seeing consumers spend less. But let's take a look at the clock and then the big chart that Hartnett described as what I see as the biggest risk for investors that's keeping me awake at night. And we take a look at the investment clock from 2024 recovery to transition to the 25 inflation boom that many people believe will happen when President-elect Trump takes office. Right now, we're seeing a bull steepening in the yield curve, which suggests you should be buying stocks. But he says that's going to turn quickly into a bear steepening where interest rates rise and be a boom for the commodity markets. Of course, you want to know where to be. Check out the links for our reports. We show all our subscribers each and every week where they should be trading, whether it's machine positioning or momentum. We give you the lead on that. And while you're there, check out Diana Shipping on the New York Stock Exchange under symbol DSX, because what Hartnett notes is that their private clients have been selling bonds in the past 4 weeks at this fastest pace since March of 2020's COVID shock, meaning their clients are dumping bonds in a big way. But when other people are selling, does that create a huge opportunity? Well, let's take a look at this next chart first, because this is what's keeping me awake at night as more money piles into the U.S. equity market. What investors don't realize is that U.S. stock market concentration hit a record high in 2024. And when we look at the top 10 companies as a percentage of the S&P market cap, what we see is that investors could drive market concentration to a new high in 2025. But the risk is, we've seen this in the past, particularly when we go back to the dot-com bubble and the global financial crisis, eventually when everybody owns the same stocks and we head into a recession, which is the absolute worst case for the market right now, that's not pricing that in at all. Well, what it means is everyone could be forced sellers of the same stock, sending the market crashing down. But let's talk about BofA's top trades for 2024. Well, the first one is anything but populism, as now the Trump 2.0 trade is a U.S. inflationary boom means a bid for crypto and gold assets. And if you're bullish on gold, wait till you see what we've got for you in today's show. Stay tuned for that. And we've got a bit on the miners. We think there's some great trade setups here. And the second trade is anything but bonds, as BofA's private clients are selling bonds at the fastest rate since the COVID pandemic. But as they're selling your opportunity, we'll make the case for the long bond here in a bit. And then there's the AI trade that's really driving what is a massive bubble in equity markets as everybody piles into the top 10 stocks. Of course, there's the big one now, anywhere but China trade. Remember, ahead of the election, when Beijing announced stimulus, everybody bought in because investors hear stimulus, they think it's bullish for the market. If you bought Chinese equities, we're going to make the case of why you need to sell them now. Take a look at the flows from the CTAs or the machines, because each and every Sunday we like to look at the technicals, momentum, and the machine position in the markets, because we believe when you understand these aspects, it helps you be a better trader and investor. And right now, what we're seeing from the machines is they're fairly long this market with little buying power left. In fact, we see over the next month, they're marginal buyers in the market in a major uptape. They go to extreme positions at 101 billion. But in the meantime, they're barely buying anything. But one thing that's undervalued, well, that is, according to Simply Wall Street, the stock for our sponsor of the day show, Diana Shipping. They're saying the intrinsic value for the stock is $3.40. And right now, at the time of filming, is trading at just above $2 a share. Stay tuned to the end of the show or check out the pinned comment or description for more information, because when we look at systematic positioning in U.S. equities, we see the machines in terms of the CTAs, the risk parity, and the vol control funds. They're fairly long this market. Yes, they can get a little bit longer. It's going to take a big move in the market to push them up higher. But once they get to that level, assuming they do, well, they're capped out. And as we know in the past, when you look at this chart, when machines getting into extreme positioning, well, they look to lock in their gains and sell in a big way. And with that, let's take a look at our screens as we start out with the S&P 500, because when we looked at that chart from Michael Hartnett, we show just how overvalued these top 10 companies are according to history. Well, it suggests that investors need to do something right now, and that is control their risk in a big way. Now, momentum is positive for the S&P 500, and how do we know that? Well, the relative strength index is above 40. It's currently at 62, although the MACD, the moving average convergence divergence, another technical indicator, has a negative cross, but we smooth that out, and we look at momentum each and every day with our Momentum Timer Pro Report, which is 13 consecutive daily buy signals. And right now we're seeing on a 1, 3, and 6 month window, momentum is maxed out. So if you're looking for a trade based on momentum, this is one where if you're buying into the market at these levels, you're only hoping it goes higher, because at some point momentum turns, and what do you see? These machines and momentum traded algorithms start selling to the downside in a big way. And that's one of the reasons we don't have a position on this. We think there's much better trades. And even looking at machine positioning, which we do each and every day, on our fast algorithm is 55% long the market. On the slow algorithm, that's 100% long. But we want to see machine positioning that's in short positions. We want to see momentum that is negative and turning around. In fact, if you want to know what two trades I'm putting on Monday morning, I've disclosed them to our CTA subscribers. You want to find out, you want to trade ahead of me, with me, hit the links in the description below, jump on those 30-day free trials, because what you'll find out, if you want to make money, you can trade right alongside me. Let's take a look at the upside target. That's right back to the all-time highs. We've nudged our downside target up a little bit to 564, but let's talk about the risk, because Hartnett says, look, there's a huge concentration in the top 10 companies in this country, but when we talk about risk, you see that I've drawn in this gray line, and you see how the market is climbing up this line. An exception for the yen carry trade blow up, well, we see the market is climbing up this nicely with a potential pullback to the trend line. Now, the risk is we go back and look, we see that there's other trend lines that rise, and what happens when it breaks it, you see there's a lot of selling. We've been on this trend line since October of 2023. The risk is at some point we see a sustainable break here, but right now the bet for market participants is that this goes higher. And again, if you're looking for a trade, we think there's much better opportunities. Let's talk about the tech stocks, because momentum here is positive as well. And despite the fact that the RSI is above 40 and at 56, we see the MACD is negative. And for a lot of people that trade these technical indicators, particularly the MACD, they find themselves getting in late, out early, in and out, all over the place. But again, we smooth that out for you. We've got 13 consecutive daily buy signals on our Momentum Timer Pro. But again, we're almost at extreme positioning across the 1, 3, and 6 month windows. But notably, our machine positioning on our fast algorithm has pulled back, suggesting, just like we saw with those Goldman reports, that there's potentially more buying here. Again, if you want to lead on the machines, you want to trade and beat the machines, we show you how each and every day. And again, you can join in with my trades, sign up for that 30-day free trial. Again, check out Diana Shipping on the New York Stock Exchange under the symbol DSX. Our upside target is unchanged, downside target revised slightly higher. higher. Let's take a look at the QQQs here, because what we're seeing is the same thing that we see in the S&P. And let's zoom out to the 5-year chart, because you see this long trend run up. There's been a couple breaks with that yen carry trade, and then right here. But the risk, you go back and you see post-pandemic, you see a big run up, and then eventually that trend breaks, and you see selling after selling after selling. The risk is at some point this trend is going to break. And so when we started the show out, we said things you must do right now, and one of those is control your risk. If you're long the U.S. equity market, you need to control your risk, because at some point you're going to see a breakdown. But one thing everyone's super bullish on, this is Trump 2.0 trade, is small caps. Momentum positive. RSI is at 65. MACD's got a positive cross. We've got 14 consecutive daily buy signals here as well. Our upside target is unchanged. Downside target 221. Look at machine positioning maxed out to the long side. We see momentum nearly maxed out to the long side as well. Let's take a look at the charts for IWM, and then we're going to talk about the China trade, because what we're seeing right now is small cap to an inflection point that they could break out to the upside in a big way. But again, one big factor here that everyone's overlooking is, despite the fact that money is flowing into the U.S. equity markets from all over the world, there's one place money needs to flow, and that's out of consumers' pockets into the real economy. We've yet to see that, and that could be the big factor here. But again, there's other trades. Let's talk about China here, because this is one that a lot of money flooded into. We noted the Bank of America reported a while back that there was a huge flood of money on news of stimulus. We said, don't buy this thing. It's too late. Momentum is negative. The RSI is just in slightly positive territory at 41. MACD's got a massive negative cross. We've got 11 consecutive daily sell signals. Now, there will be a time to buy Chinese equities, and right now we're on a sell max on our 1-month window. And when we see a flip in this, well, we have back tested all of our data points. So when we see a flip, we'll let our subscribers know if we think this is a buying opportunity, because I review every trade recommendation every day from our reports. And look at machine positioning. This is what we want to see, a big short position on the fast algorithm. Let's take a look at the charts here. Going to make the case of why, if you own this, you've got to sell this thing, because when we zoom in, you see here, there is a China stimulus trade. It gapped up, gapped up, gapped up. There's your island gap reversal. You see the island up here? Well, there's gaps in between it. Then there was a gap here, and then we see another gap forming another island. And right now, this is teetering on the edge. You see further breakdown here, and what you're going to see is this thing's going to come all the way screaming down to 26.51 and then back into support. There could be a great buying opportunity later, but right now, if you own this, you've got to get out. But something that everyone's getting out of that maybe you want to get in on is TLT, the long bond. Let's take a look, because momentum is positive. The RSI is just over 40. MACD's got a positive cross. We've got 4 consecutive daily buy signals, but you know, we didn't trigger a signal yet on a report. Why? Because I reviewed the trade setup and for both of our subscribers on the CTA reports, on the Momentum Time Pro reports, and I said, look, we're seeing the setup here, but not yet. It's coming and coming soon. I'm going to make the case, because we've seen some buying on our fast algorithm, but our slow algorithm remains massively short here. Our upside target is 92.49. We hit our downside target, and I've left it unchanged because I think that that is now where the bottom is. And let's take a look at TLT, and here's our upside target. It is the 6-month volume profile line where the most shares have been traded over the last 6 months. This is right now what's called overhead resistance. But look at this. You see the RSI moving higher. You see the MACD moving higher. And let's zoom into the 10-day window here. And what do we see? Volume profile line just above the current price. And this is kind of what I told our subscribers. We need to see a little more before we put this trade on the books. You see the 30-day volume profile up closer to the 6-month window. How about the 90-day? It's up there too. We need to see a little bit more convincing on this, but once we get that, well, this could be Wall Street's next big trade. Because remember, everybody's been selling and everybody's short the long bond, not to mention that China and Japan are selling as well. Again, could be a huge opportunity. But now let's take a look at gold, because we put this trade onto our subscribers. We now have 1 consecutive daily buy signal on our Momentum Timer Pro, as momentum is now turned positive, and that trade went on the books on November 21st and is currently up 1.47% for our CTA subscribers. Our upside target is now back near the all-time high. Downside target has been revised higher. We see machines are buying here, but look at momentum. We see an early shift here in gold, and what that means, there could be a trade for a Momentum Timer Pro subscriber. which means there could be a trade recommendation coming for our Momentum Timer Pro subscribers. You've got to sign up to find out. Now, am I trading gold? Well, maybe there's a different commodity I'm trading. You want to find out what it is? Sign up for our CTA report. Again, 30-day free trial, links in the description below. We show you all the trades and even my personal trades. But if you're looking for opportunity, let's then look at the gold miners here as well. We had to buy it open on the 22nd, the day after our gold trade. Currently, that's down 0.49%. We think there's some upside potential, and we see it coming off a sell max for our Momentum Timer Pro report, suggesting there could be a trade setup waiting for our subscribers there for Monday morning as well. We revised our upside target to 40.73 since we hit that. Downside target relatively unchanged. Let's take a look at gold and gold miners here and see what's going on, because when we look at gold, we're seeing a move here, a break over a 6-month volume profile. You see the trend line there. Let's zoom out to the 1-year chart. There's the trend line. Right now, it needs to sustainably stay above this to validate that this was a bear trap. If that's the case, you're looking at a run back to all-time highs. Now, let's take a look at GDX, because if gold goes higher, usually the miners do, but you get a different perspective here. You see that trend line that was crawling up higher and higher and stair-stepping up? Look what happened. You got a bear trap. Now, remember, we made some money on the junior miners, but right now we need to see GDX get above this trend line and hold it, validate this is a bear trap, and that means you've got some upside window. This is a trade we told our subscribers that you need to keep your stops tight on, at least for the moment, but there's potential. If we see a continued rally in gold, big opportunity, not only for the metal, but for the miners. And again, you want to find out what I'm trading? Well, check out the links in the description below, because BofA said commodities could be the next big trade. Well, soybeans could be one of them. As momentum is negative, machine positioning is negative, it's all setting up for a big move in soybeans. And let's take a quick look at that chart, because our subscribers will get first notice on this, because when we zoom out to the 5-year chart, if we see a breakdown at this level, well, your next level of support is just above 19. And if you zoom out far enough, what you find out is there's support way down there. And what that means, tremendous buying opportunity. But some of you think there's a huge buying opportunity. That is the stock for our sponsor for today's show, Diana Energy. You can find them on the New York Stock Exchange under the symbol DSX. And again, they specialize in ownership and bareboat charter and dry bulk vessels. Again, all the information you need in the pinned comment and description below, because their fleet consists of 39 dry bulk vessels, excluding the 2 methanol dual fuel new building dry bulk vessels that are yet to be delivered. And they've got 49 years of maritime experience, 19 years on the New York Stock Exchange, 38 vessels currently in the water, a massive amount of combined carrying capacity, and they've got over 1,000 employees across the sea and ashore. And their main objective is to manage and expand their fleet in a manner that will enable them to enhance shareholder value. And to accomplish this objective, we intend to pursue highly focused business strategies, including maintaining a high-quality fleet, strategically expanding the size of our fleet, pursuing an appropriate balance of short-term and long-time charters, maintaining a strong balance sheet, and maintaining low-cost, high-efficient operations. In addition, we intend to capitalize on our reputation for high standards of performance, reliability, and safety to establish and maintain relationships with major international charters and financial institutions. And according to Simply Wall Street, when should you buy Diana Shipping? Well, it could be right now, because they're saying Diana Shipping is still a bargain. According to their valuation, the intrinsic value for the stock is $3.40, which is about 60% above what the market is valuing the company at the moment. This indicates a potential opportunity to buy low, although there may be another chance to buy again in the future, because Diana Shipping's beta, a measure of share price volatility, is high, means price movements will be exaggerated relative to the rest of the market. But future outlook is an important aspect when you're looking at buying a stock, especially if you're an investor looking for growth in your portfolio. Buying a great company with a robust outlook at a cheap price is always a good investment. So let's take a look at their expectations, because with profit expected to more than double over the next couple of years, the future seems bright for Diana Shipping. It looks like higher cash flows in the cards for the stock as well, which should feed into a higher share valuation. And they recently announced a successful $25 million tap issue, as the total outstanding amount under the bonds following the tap issue is now $175 million. The tap issue was initiated by a reverse inquiry and was priced at 102% of par value. And net proceeds from the tap issue will be used for general corporate purposes in accordance with the bond's terms. And based on Simply Wall Street's research, we see that Diana Shipping could be a huge opportunity, as it's 60% below its current intrinsic value. But as always, with any company we feature on our show, you're under no obligation to purchase their stock. Be sure to do your own research before placing any trades. And with that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.